Good afternoon, everyone. Thank you for tuning in for this special webinar called Cashflow During Coronavirus, Strategy and Tactics for Business Survival and Recovery in the Age of COVID-19. I'm Laurie Ross from Smith School of Business at Queen's University in Kingston, Ontario. Smith is proud to be partnering with the City of Kingston and Kingston Economic Development to bring you this community classroom, a series of weekly webinars by Smith faculty to help local businesses and not-for-profits cope with the impact of COVID-19. Before I introduce today's speaker, a couple of quick things. First, today's discussion will be recorded. We'll post a link to that recording on the website where you registered for today's webinar. Second, you'll be able to pose a question to our speaker at any time. To do that, just use the Q&A button that's at the bottom of your screen. We'll answer those at the end of the session. Third and final point, we have two polling questions now to find out who's joined us today for the Community Classroom webinar. So we're going to open the first poll, and you should see this on your screen momentarily. So here's the question. Thinking of the primary business or organization you represent, how to classify it? Please just select one, and you can scroll down to see all 10 choices. And then hit submit after you've chosen. We'll take a few seconds to do that. Okay, just a couple more seconds. Okay, we'll close the poll and we're going to take a look at our responses. Okay, looks like we have a good mix of organizations. All right, great, thank you. We're going to go next poll. Second question. So thinking of the primary organization business you represent, and based on your current view of what may come over the next 4 to 6 months, how would you assess the prospects for your organization or business? Please just select one. A few seconds to take a look at that and then hit submit. Okay, a couple more seconds and we'll show the results. Okay, we're going to close that poll and take a look at your responses. Okay, so we've got a mix of responses here again. I think what Peter will have to say will help out many of you. All right, thank you for participating in that poll. It's now my pleasure to introduce today's speaker, Dr. Peter Gallant. Peter is a leader and serial entrepreneur with extensive experience in early stage technology companies and advising early stage and high growth technology companies, venture investors, and government agencies in development and innovation strategy. Peter is an adjunct professor at Smith School of Business, focusing on strategy, innovation, entrepreneurship, and new venture finance. Peter was the founding president and CEO of Pathogen Detection Systems, based in Kingston. He was also president and CEO of WaterTap and established Real-Time Venture Advisors to provide advisory services to emerging high-tech growth companies. Peter holds 3 degrees from Queen's, a BSc, MSc, and PhD in electrical and computer engineering. Thanks for being here today, Peter. Over to you.
Great, thanks very much, Laurie, and welcome everybody to the first of a series of webinars that we'll be giving here coming out of the Smith School of Business, and this one entitled Cashflow During Coronavirus. And this particular webinar is the first in the Community Classroom series, and I'm pleased to indicate that we've got a number of outstanding Queen's faculty lined up over the next couple of weeks to talk about various implications and strategies of how to deal with the business implications of coronavirus. And I'm also pretty fortunate that I get to go first because a couple of the speakers like Ken Wong next week are going to be really hard acts to follow. So if we go and talk about the situation that's come upon the entire world, it's amazing to me that a virus particle measuring less than a micron has been able to wreak havoc not only with our lives and our health, but also with the world of the world economy. And coronavirus is truly a killer of people. it's a killer of jobs, and it's a killer of prosperity. And it is an unprecedented situation that we're all aware of, and we're all probably, quite frankly, pretty tired of hearing about on a daily basis. But bear with me one more time as we talk about some of the economic implications, but also let's talk about the business implications of what we can do given this new reality. And so my intent over the next hour is to spend about 30 to 40 minutes framing a strategy of how to potentially approach this critical situation, and then leave some time for discussion and Q&A. We might not be able to discuss everybody's individual business circumstance, but I'm certainly happy to discuss in general terms some of the strategic implications, as well as the kind of tactical approaches that you may have to use to work your way through this unprecedented situation. So if we look at what happened in terms of the rapid onset of coronavirus, we certainly saw from the medical and epidemiological side, we saw a rapid onset of cases. But what I found online, I thought was some pretty interesting data. On the left-hand chart, we see from OpenTable, which is an online booking service for restaurants, we see restaurant booking rates as a percentage of their normal annual state for major US cities: Austin, Chicago, LA, New York, San Francisco, and Seattle. And we see that for back as early as mid to late February, all the way through to early to mid-March, bookings were just beginning to trend down, and then very rapidly fell to 100% loss of bookings, of course, due primarily to forced closure and shutdown of the restaurant business, along with large sectors of the entire world economy. And so an incredibly rapid onset event as coronavirus invaded and spread across the world. And if you look at from the most flat part of the curve down to where business fell apart completely, at least this is a kind of an interesting digital indicator, it was a space of 9 days. So incredibly rapid onset of this situation, and unforeseen to any significant extent. And the implications of that, again, using some US data, is unsurprisingly, within the week of mid-March, we began immediately seeing sharp rises in unemployment that have continued well above not only the historical average, but of course are unprecedented in any period of history before. So we know all this stuff, but it's just a good reminder of how rapidly this came about and how acute the impact has been on the economy. And the last slide, in terms of posing some background, is understanding the relative magnitude of the impacts that we're talking about. So we've seen job losses in the first 4 weeks that were 10 times higher than any previous economic downturn, including 2008, including the dot-com recession, including 9/11, including the recessions of the early to mid-90s. So this is obviously with us for a long time, and as a lot of the talking heads on the various business television shows are talking about, this is going to be with us for years, and there really is going to be a new normal coming out of this somehow. Okay, so that's a little bit of the background. We know a lot of that stuff, and now let's talk about some observations of kind of where we are using that mid-March indicator as a baseline. And I like to describe, when I'm dealing with consulting clients or when I'm dealing with discussions with some of my students on the courses that I teach here at Queen's, I describe the rapid onset of coronavirus as, for business owners, as a come-as-you-are situation. In other words, whatever cash and resources that you had on hand approximately around March 15th are essentially the resources that you now have at your disposal to get through this. They're the resources you have at your disposal to weather the current shutdown during the most acute period that we're experiencing right now, as we're flattening the curve, trying to get to the other side of the curve. And it's becoming quite evident, both in Ontario, Canada, and in other jurisdictions, that the back end of the curve has a fairly shallow slope, and it's going to take a long time to recover from. So you've got cash at your disposal to get through the acute phase of the coronavirus outbreak. You've got that amount of cash on hand to stabilize your business, right, throughout this period of time. And third, you've got that amount of cash on hand to position the business for the new reality that's going to occur in the longer term, which is going to affect different types of businesses, obviously, in dramatically different ways. We're all not alone as business owners and operators and entrepreneurs. And so we can also use a metric called the cash buffer to get a sense of how long companies can operate for without any income. So the cash buffer is actually calculated by taking a company's average expense and expenditure rates and assuming that there is no income coming in from normal operations, as well as no income coming in from the receivables of previous work that has been done that has been invoiced to clients. And so again, using US data, we find that, and I don't have no reason to suspect that Canada is any different in terms of the health of its businesses going into this, there are approximately, the median business has 27 days of operating cash. Now, we're already well past March 15th, so that number is a lot lower. But even going into this situation, 25% of businesses had less than 13 days of operating cash in the bank, assuming no income coming in. And only 25%, the top 25 of businesses, still had only about 62 cash buffer days of runway to operate without additional cash coming in. So if you're a business owner, imagine yourself on that continuum through worst case 0 cash buffer days, 25% case 13 cash buffer days, median 27, and if you're one of the fortunates to be on the tail end of the distribution, you've still probably got less than 90 days of cash buffer to operate. And across the bottom of the chart, what was interesting about this result was restaurants, repair and maintenance operations, retail operations tended to be on the low end of the median of cash buffer, where healthcare services, high-tech manufacturing, and other professional services tended to be a little bit better off in that their cash buffer was a little bit longer than the median. But we're all in this together, and nobody has an infinite cash buffer. No business has that. So we're all along this continuum of how much cash we have to weather the storm, transition the business, and get to a new normal. And one of my great friends, David Allen, the author of a book called Getting Things Done, said to me recently, he said, Peter, a crisis takes away all of the options. It takes away all of the requirements to react. For example, if you blow out your tire on the highway, then you really have one very simple focus, which is to pull over safely to the side of the road. But that's only true in the immediate short term, right? When the crisis hits, there are obviously some responses we had to take right away. But in the long term, I prefer to use the well-known business analogy of the translation of the word crisis from the Chinese language. And in that language, the symbol for crisis is actually made up of 2 characters. It's made up of a character representing that it's a time of danger, and a second character representing the fact that it's also a time of opportunity. And so for the remainder of this webinar, we're going to talk in terms of the strategies and tactics around understanding the risks and dealing with the danger piece, but then also, most importantly, developing realistic plans that go beyond the prevention of business failure, go beyond what I'm going to call defensive tactics, and also talk about plans to adapt and have businesses that can transition and thrive in that new normal, and encouraging everybody who's in a challenging business situation to carefully consider their approach to both the defense to deal with the danger, as well as the offense to deal with the opportunities that are ahead of all of us going forward. There was some great advice issued by one of the largest venture capital firms in North America recently called Sequoia Capital. And Sequoia issued a letter to its portfolio CEOs with some guidance about a month ago, and said, having weathered every business downturn for nearly 50 years, we've learned an important lesson. Nobody ever regrets making fast and decisive adjustments to changing circumstances. In downturns, revenue and cash levels always fall faster than expenses. In some ways, business mirrors biology. As Darwin surmised, those who survive are not the strongest or the most intelligent, but the most adaptable to change. And that's pretty applicable right now. And so whatever situation you're in as a business owner, it falls on you to understand that it may be worth taking some serious, decisive, upfront action that may in the short term look like a little bit of an overreaction, but in the long term may end up being a key part of a successful business transition. Introducing our first and most important decision-making tool when we're faced with a challenge of this magnitude. And this is what I've advised all of my consulting clients, all of my friends who run startups and my colleagues who run established businesses, is get down to cash and focus on cash flow. And for a lot of business owners, that's actually a challenging transition because a lot of business owners rely on monthly or quarterly or even sometimes less frequent review of traditional accounting statements like profit and loss statements or balance sheets. And if we've studied some accounting, we know that a lot of these financial statements are accrual based. They're not necessarily based on cash. And a lot of business owners will confess that they don't pay a lot of attention to their cash flow statements or their sources and uses of cash statements that their accountant may produce 30, 60, or 90 days in the past. Well, now's the time to change that. And so the approach that I'm going to suggest that all of us take who are dealing with early stage businesses or any established business for that matter is to develop an intimate understanding of the cash flow involved in your business and monitor cash on a weekly basis. Get down to that level of resolution of understanding and managing your cash position. Now's the time to drop down to weekly and use that information to make informed cash flow based decisions that inform every aspect of your business operation, from what customers you're going to work with, what orders you're going to accept, how you're going to maintain your staff complement, what expenses you're able to maintain going forward. Every operational decision in the business for at least the next foreseeable future is going to have to be made based on cash. So what do I mean by that? Let's look at that. And I've put together a 4-step process of which is exactly what I'm coaching entrepreneurs offline to do, which is to start in step 1 by developing that weekly cash flow projection. And for those of you who may not be familiar with how to create that cash flow projection, I'm going to walk through a pretty simple example right now, which you'd have to tailor to your own particular circumstances. And this is where your CFO or your accountant or your bookkeeper may be quite instrumental in helping you build out that weekly cash flow process. So the first step I would do within developing a weekly cash flow is on paper, on a simple paper ledger, or on a spreadsheet like Excel, simply record your current bank balance. Log into your web banking screen and understand exactly how much cash you have on hand today, including all accounts that are accessible if you have more than one current account. And from that, look at a recent financial statement or a recent bank statement to understand if there are any outstanding checks that have already been written that would reduce your working balance. So in this example, I may have a cash balance, a bank balance of $47,000, but I realize that I have $2,000 of already committed funds in the form of outstanding checks that I've written or pre-authorized payments that are automatically going to go through. And so now I realize that I have a working balance of, say, $45,000. Once I know my working balance, I can use that as the header of a new column for a weekly cash flow projection. And so put that balance, that working balance on the top of that column, and next add in any sources of cash that will be received and deposited this week. So get down to that level of detail of understanding of incoming cash. And one important caveat here, and that is to only record income that is certain to occur this week. So if you physically got a check in your hand that has been mailed to you by a customer and you're able to deposit it this week, it goes on the cash flow projection. If somebody tells you the check's in the mail, I still wouldn't put it on this week's projection. The idea is to get as accurate a picture of what our actual potential incoming cash really is going to be, literally on a weekly basis. From there, once we've added in all the cash inflows that are possible this week, we can also then start looking at all of the cash outflows that we're planning on spending during the week. And the good news about outflows is that they are entirely within our control as business owners. We have to decide which outflows to generate, which invoices to pay, which expenses to satisfy with outgoing cash. Now, that also would include not only pre-authorized debit payments that automatically come out of your account for utilities or cell phone bills, but also importantly, any payments that you're planning on making, as well as the net amount of any payroll that's going out the door this week. It depends if you're paying your employees weekly, bi-weekly, semi-monthly, or monthly. You're going to have a fairly large, in most cases, net debit to your account of the net balance of payroll. And you'll have a second debit either at the same time if you're using a payroll service, but maybe a little bit later if you're not. If you're doing manual remittances, you'll have another remittance for the employer and employee portion of CPP, EI, and statutory tax remittances. Those are technically held in trust for the government, so those should be paid, but the timing of those cash outflows may fall into another week of our cash flow projections. After you've got your inflows and outflows calculated for the week, you can add those, subtract them from one another, and determine the net cash gain or loss for the week. And in most cases, if revenue has been subdued or reduced, this may be a negative cash situation for the week. In other businesses that I work with, the actual incoming cash has not begun to diminish yet because there's a lag between the impact on the economy and then the slowdown propagating its way onto cash flow statements. So you may still be seeing some positive cash gain as you're able to more rapidly control your expenses than you are necessarily seeing a slowdown on incoming cash. But this is not going to last forever. And as a result of that weekly estimate, you're going to take your opening balance, reduce it by net cash if it's a loss, or increase it by net cash if it's a gain, to get your weekly ending balance. And as you can probably imagine, that weekly ending balance becomes the starting balance of next week's cash flow projection. And literally, it's a week-by-week projection. And making as good assumptions as you can make about the timing of incoming cash, the requirements for outgoing cash to flow out of the business, out of your accounts. Repeat this weekly cash flow projection process for as many weeks as possible until your cash level is at or below zero. And every business, if we think back to those cash buffer days remaining, at some point, every business that has less cash coming in that is potentially going out is going to eventually fall to zero. It's going to be on that trajectory. And we're not going to panic yet. There's going to be some factors that we're going to add and talk about in a few minutes. But it's important to understand at what point the business could face a zero cash situation. You also still want to continue those projections out by a couple of weeks or months afterwards, even if the projections go negative, because we're then going to go and find additional sources of cash that will extend the runway of your cash flow projections. One example of that is the recent Canada emergency loans that have been advised by the government. And we'll be talking about a little bit more of the detail now that we know more of the detail in a few minutes. But that would be one example of a positive cash injection that may occur several weeks in the future that may move out that zero cash date, in some cases by a significant amount of time. That's a good thing. Be very conservative on estimating incoming cash, because even customers who routinely pay on time or have agreed to pay on time may suddenly be experiencing unprecedented economic problems of their own. And so it would be best to go and understand what the payment status is, especially if you have major customers who comprise a significant proportion of your cash flow. And last, it's good to get a general understanding of what I call your weekly burn rate. How much cash is expended in the business in any normal operating week. Remember, you may already have built-in assumptions of maintaining, for example, the majority of your staff on payroll, expecting to recover some of or all of a significant amount of that payroll by the 75% wage subsidy that's been announced by the government. But this has to be factored carefully into cash flow projections because of the difference of timing from the cash outflow as we're paying staff until any possible cash recovery from the government programs kicks in, which could be several weeks or even a month or two or more down the line. So that's step one. We got our weekly cash flow projection. Now we need to move on to step two, which is determining our runway. In other words, determining how many weeks our cash is going to last us in that base operating plan. And runway is used in early stage companies all the time as the concept that cash in the bank actually translates to time. It translates to operating time. And so if we're talking about weekly cash flow forecasting, our runway measured in weeks is the number of dollars we have on hand divided by the weekly cash expenditures, our weekly burn rate. And we may find that we have 4 weeks of runway left at this point in late April. We may have 8 weeks of runway left. But it's important to understand how much time we have available to us with the cash on hand in what I call this come as you are situation. Cash buys time. The longer your runway, the more time you have to take action going forward. This is not about planning for some sort of slow failure scenario. It's getting a clear, open-eyed understanding of how much time you have to reconfigure your business for long-term success. If you're down to a few weeks of operating cash, remember that 50 years ago, NASA was able to recover 3 astronauts on Apollo mission out to the moon and get them back safely. So don't panic, and as they say at NASA, work the problem. Step 3 is to build a cash flow-based action plan. In steps 1 and 2, we've now got our basic weekly cash flow laid out. We understand how much operating time we have with the cash we have on hand. And I use this euphemism very often, both with my coaching clients on the business side. I also do some work in the financial independence and personal finance communities, and they really like this analogy, which is to spend cash with an eyedropper. Spend cash with an eyedropper at this point. Cash is your precious resource. And I like the eyedropper analogy a lot because an eyedropper speaks to very controlled flow, outflows of cash, very focused spending of cash, and very precise deployment of cash for specific business operating executives going forward. So if you remember anything from this webinar, remember to spend cash with an eyedropper. We're also going to work to identify ways to extend the runway. And what I'm going to talk about in the next few slides, I'm going to refer to as our defensive strategy. Those can include government loan programs, wage subsidy programs. We could defer commercial mortgage payments, for example, by working with our bank and with our creditors, as well as we may have to explore some painful scenarios to reduce salary or other major expenditure items. We may have to consider job sharing. There is a federally mandated job sharing program that does take 30 days to apply for, but could reduce your salary expense by having employees share jobs. You could look at furloughing staff if they may be better off by claiming the Canada Emergency Response Benefit, for example, especially if your staff are part-time. But remember, the CERB terms have been recently amended to allow employees to earn up to $1,000 during any of the 4 benefit periods before they become ineligible for the CERB. And so there may be some difficult decisions, but remember, by using your base cash flow estimate, you can model a number of different scenarios and determine if certain cash-based decisions actually result in meaningful extension of runway. For example, if the wage subsidy benefit works as the government intends to, many business owners may not see a significant extension of runway when 75% of wages are subsidized. So it's good to have that base scenario to understand what the real implication of some of those cash flow based decisions are going to be. And the last thing coming out of the step, the gating criteria to leave the step, is to develop a written action list of actions that you can do to impact your own cash flow and extend your runway. Some of those actions you're going to take yourself as the business owner. Some of those you may be able to delegate to other members of your team. And some of them you're going to call on your professional network to assist you with. Or we're going to tell you at the end of this webinar about some of the community-based support resources that the Queen's School of Business, the Kingston Economic Development Corporation, and the City of Kingston have put together to help entrepreneurs during these difficult times. Last is step 4. Make decisions based on cash and cash flow. And these decisions can be different than the decisions that many business owners are used to making that are based on optimizing or maximizing revenue or profit for the business. And an example that I've used with several of my coaching clients is you may have an opportunity to make a major sale in the short term with potentially even a new client that involves significant upfront expense. You may have to go and commit to purchasing inventory, or you may have to commit to putting labor hours into fulfilling that order, but you may have the potential for a delayed payment, and that could cause a negative cash flow impact. And it may be that you decide as a business owner to take that order, but you may want to carefully negotiate terms to include upfront payment or payment on delivery or some other terms that mitigate the negative cash flow impact that what would otherwise look like a pretty attractive order for a business operating during normal times. But these aren't normal times, so our decision-making process around cash is going to be a bit different than the decisions we'd usually make around revenue and profitability. And coming out of this step, if you program yourself and condition yourself to make some cash flow-based decisions, at some point, you can only cut so many expenses, you can only reduce your cash flow, you can only spend a limited amount of money through that eyedropper. But that's not the point in the exercise of operating this business through the next 12, 24 months or longer in what we're going to see in the economy. And as a result, not all decisions that you're making as a business owner should really be defensive in nature. What do I mean by that? Let's talk about planning our defensive strategy first, get that out of the way. But planning your defensive strategy is not exclusive to planning for the future. And so now, based on our weekly cash flow projection, we also can go out and hunt for cash, find current cash that may be available in the business already. There may be receivables, previous invoices that customers still owe you that are outstanding, and it may be time to pick up the phone and start asking gently for payment of those invoices to bring in additional cash into the business. Remember, be very careful where you put those potential receivables into your cash flow estimates. You may have just recently received shipments of inventory that may now not be relevant or may be very difficult to sell. You may be able to negotiate with your suppliers to take a return of that inventory in exchange for credit. If you've already paid for the items, you also may even be able to try to get a cash refund. So think of as many ways as possible and be prepared to make some of those requests of your business partners to find as much current cash as possible. You also may be able to defer payables. And what I advise my coaching clients to do is to not simply stop paying your suppliers. Obviously, don't stop paying your employees either, but you may be in a situation in which you go back to your suppliers and renegotiate and say, in normal times, you've always recognized the fact that we've paid our invoices within 10 to 15 days, and we may need a little bit longer payment terms, or we may need to draw out our payment over the next couple of months in installments. And so remember that a renegotiated commitment, even on paying outstanding payables, is not necessarily a broken commitment. So get on the phone, be in communication with your suppliers, and be very clear about what you're able to do to protect your own cash flow where at the same time being able to go and provide cash flow support to the other businesses that are part of your value chain. Next, you can look as part of your defensive strategy on securing what I call future cash. This is cash that we would anticipate coming into our cash flow estimates, but it's going to have some delay because it's going to have to go through some sort of process. This would be the $40,000 Canada Emergency Business Account loan. I have a little bit of feedback and some information from the front lines on how that program is actually working in reality that I'll share with you in a few minutes. There's salary support, both in the form of the 10% and a 75% wage subsidy if the company qualifies. And there are some qualifying criteria that you have to be very careful to understand before applying. And you also may be able to increase, for example, existing lines of credit or bank overdraft protection or other credit facilities that may have already been established for your business that you may have some available credit on. So there may be some sources of future cash that you can bring into your cash flow estimate as part of your defensive strategy, along with planned reductions in cash expenditures, all with the objective of extending that runway. Great. Remember, one of the things you're going to have to do is also look for risks and prepare to negotiate. And so unsecured credit lines that creditors may be running risk analysis now on businesses, and those unsecured credit lines could be reduced or eliminated completely, sometimes without notice, depending on your agreement with creditors. So don't rely completely on these for cash flow. So understand what your credit situation is and whether or not credit lines could be reduced by your creditors. Be proactive and develop a viable scenario that is a viable bridge to somewhere, right? And how to go about doing this is to take that weekly cash flow projection and either extend it out over the long term, or after 6 to 8 to 12 weeks of weekly projections, start transitioning to doing monthly projections. You have a pretty good estimate of your weekly cash expenditure rate. And so you'll be able to use the same approach that I outlined for the weekly cash flow estimate to do a monthly cash flow estimate. And I would suggest you do that for the next 12 to maybe even 18 months. And the reason you want to do that is even if it falls to zero before you are able to implement some of these cash recovery strategies we're talking about, it gives you a baseline case to make longer term cash-based decisions. And it's important to do this because you're going to need to share some of this information probably fairly soon with some of the business partners in your business network to be able to continue to operate in the longer term. For example, if you have outstanding lines of credit or loans or other facilities with banks and other types of creditors, at some point they're going to have to run their own risk management and risk mitigation plans, and they're probably going to come back and ask you for more information about what your current business situation looks like in the face of the COVID-19 outbreak. And so it'd be great to be proactively prepared with cash-based projections that go out for 12 to 18 months. And I would rather be in a situation with my creditors where I have a clear plan that I clearly communicate proactively to those creditors to make sure my bank understands what my strategy is and how my credit facilities are going to help me weather a short-term cash downturn, but in the long term represent a viable long-term strategy. In other words, we don't want a bridge to nowhere. We want to be able to demonstrate that any credit facility really represents a bridge to somewhere positive coming out of this whole economic episode. And I'm also pleased to indicate that Professor Shea Dubai will be on in 2 weeks to discuss during the community classroom series, so the same time slot 2 weeks from now, to discuss negotiation strategies and tactics. And we'll use some of these examples in 2 weeks from now. So please plan on attending that community classroom session as well. Moving on, here's some tactical intelligence with some of the work that I'm actually doing with business clients, both in the Kingston region and a little bit farther afield. And I found that the bank administration of the emergency business account has actually gone quite smoothly. There's not that much information required to make the application. There's a maximum of $40,000 in the loan. That loan is dispersed immediately as cash, all into the current account that you designate during the loan application. And we see those accounts funded within 10 to 14 calendar days. So a very rapid process, not unlike what's happening with the Canada Emergency Response Benefit on the personal side. Very rapid application process, not that much information required. There are some qualifying criteria, so make sure you apply only after you've confirmed your business is eligible. And there is zero communication from anybody through the review process. The money simply appears. And so don't expect that you're going to get a lot of updates or communication. Put the application in, work with your banker to make sure that it was submitted properly in the bank systems, and then simply wait. And perhaps that's when you'll, the earliest I would factor in cash from the emergency business account would be about 14 days after application is where I drop it into my cash flow estimate. The Canada Emergency Wage Subsidy Program, it's been announced now the program opens on April 27th. So again, carefully review the eligibility criteria, because the eligibility criteria for period 1, 2, and 3 are a little bit different in terms of the calculation options you have to demonstrate business downturn and economic loss. So if you qualify for period 1, I believe you can automatically qualify for period 2 as well. You also have to consider some of the business impact of, for example, if you have a services-based business with prepaid services that are really no longer able to be delivered, you may offer refunds to your clients, which may reduce your revenue during the eligibility period before applying. So carefully look at the criteria, work with your financial advisors to make sure that any refunds that are required to be given or could be given are used, and that can effectively reduce your business income and meet some of the qualifying criteria. The window for applications opens on April 27th and closes on May 3rd, and then all of the applications in that period are not being processed first come, first serve. They're being batch processed on May 4th. So you do have some time to make sure you have your information together to apply for that program as well. We're not sure how long it's going to take to see those disbursements. The government has advertised only 3 or 4 business days from application to disbursement, but for safety purposes, I wouldn't factor it into my cash flow for at least 2 to 3 weeks at least after application. One other quick note about dealing with banks. If you have a line of credit or some sort of operating facility with a bank, you may have a general security agreement with the bank. And so you should confirm that, and whether or not that general security agreement is focused only on your business assets, or if you have a sole proprietorship, it also could have a claim over your real estate and other assets, personal assets as well. So understand what your security exposure is, just in terms of your own risk management. But also remember, if you were to approach another bank for a loan, most lenders will not take a subordinate position or a second position under an existing general security agreement. The one bank that will is the Business Development Bank of Canada. So consider approaching BDC for loan support if you're looking to extend lines of credit where a general security agreement conflict may be an issue. Last couple of slides before we open it up for questions. Startups and pre-revenue companies, I've had lots of questions from early stage companies saying, how should we manage through this? Early stage companies have a particular mix of challenges. One is they have zero or relatively limited revenue because they're typically in development of products. They're not launching the products. They're not growing rapidly in the marketplace. Yet, if that's the case, then you don't have as much to model on the revenue and expense side, but you're going to have to look to some of the programs that have been extended by government. So government has gone back and injected $1.2 billion into their existing innovation programs like the Industrial Research Assistance Program. So get in contact with your NRC IRAP rep and some of the other business support programs. Talk to your regional innovation organizations about what types of business support programs are available, because some of those programs have now received fresh funding. every entrepreneur of early stage companies and established companies are going to have to be recasting their business plan and milestones. You're going to be looking for new opportunities that are afforded by COVID. You may be looking for new markets that are now opened up or made available or enabled by the COVID situation. And remember that as a startup, one of the benefits you have is because you don't have a large established customer base or products already in the marketplace, you may be able to pivot dramatically and take advantage of new opportunities, because startups by themselves, by definition, are usually pretty nimble in being able to identify opportunities. And one quick note for companies that are approaching or are funded by venture capital. I've worked with a number of venture capital funded companies in the last couple of weeks, and most venture firms are working to support their portfolio companies. They're willing to invest new cash. They want to see viable business plans, and they want to see viable bridges to somewhere. In general terms, valuations are being reduced or renegotiated to reflect the impact on the equity markets. So 20 to 30% was that short-term pullback on the equity markets. Expect similar reductions in valuations if you're negotiating with a venture investor right now. And some investors are going back and taking larger rounds of financing and breaking them into smaller tranches, or in other words, installments, because they would like to hold back some of that cash until they have more information about what the true long-term economic impacts of COVID are going to be. One major point that I'd like to make very clear during this webinar is you can't win by doubling down on your defensive strategies. There's only so much defense we can run. There are only so many expenses we can reduce. There's only so much cash that we can spend with an eyedropper. And so a friend of mine has talked a lot about not doubling down on defense without thinking about offense. And I think that's great advice. So at some point, once you've got your defenses set, it's time to think about new possibilities for the new reality going forward, and figure out how to reposition and recast the business to operate effectively under these new conditions that are going to be with us for a significant period of time. What are the new markets that you can address? What new product and service offerings can you offer your customers? Maybe there's new customers that are going to come out and come to your business as a result of the situation. Are there new types of partnerships and joint ventures you can work with others along your value chain? And what types of business systems that can you implement as well? A lot of us have a lot of time right now to clear the decks, to clean our basements, but also we could be working to clean and reorganize our businesses. But most importantly, we could be working on developing really effective, clean business systems to have our businesses operate more effectively in the future than they ever have in the past. Use that pandemic pause, use the time to redevelop not only our business operating models, but again, the business processes that we're going to use to operate our businesses going forward. One other session that I think is going to be very interesting is coming up on this time slot next week, where Professor Ken Wong from the School of Business is going to speak on anticipating the new normal, critical changes to plan today. So I encourage everybody to tune into that session as well. Last couple of thoughts before we open it up for questions. And this was part of that Sequoia Capital letter as well. And that is, they conclude their letter by talking about a distinctive feature of enduring companies is the way their leaders act in moments like these. Your employees are all aware of COVID-19 and are wondering how you will react and what it means for them. False optimism can easily lead you astray and prevent you from making contingency plans or taking bold action. Avoid this trap by being clinically realistic and acting decisively as circumstances change. Demonstrate the leadership your team needs during this stressful time. I think those are great thoughts, and they apply to every business. A couple of concluding thoughts before we open it up for Q&A. We're all alone together. None of us have faced this scenario before. There's lots of talk of this being one of these black swan scenarios, and I personally believe it is. This is the most challenging business environment we've had in a generation, and Some businesses won't survive as a result, and there is no shame in that situation. Other businesses will struggle and recover, and other businesses will thrive. And so wherever your business is, it's nothing to take personally. This is an unprecedented impact across the globe. Remember that to keep your business operating effectively, you have to be operating effectively as well. That means managing personal stress, managing family and family challenges, keeping your employees up to date with timely and transparent communications about what's going on, about the decisions that you're making, and make sure that communication is frequent, and make sure that employees are able to ask questions if things are not clear. If you're a sole proprietor, so you're not running an incorporated business, you have additional personal risk in addition to your business risk. And so think very carefully about that delicate balance between personal financial risk and business risk going forward, because you're going to have to combine and carefully look at your personal and business risk together holistically as you're coming forward with your go-forward plan, because you simply don't want a business failure to translate into now a significant personal financial challenge as well. And so it may be time to look at risk mitigation strategies around that. Use your professionals, your accountants, your law firms, both in Kingston and in Ontario have been phenomenal in terms of some of the information that they've produced. They're publishing timely and relevant information on the loan programs and the criteria, what the qualifying criteria are, and in fact, some of the income tax applications implications as well of applying for these programs. Some examples that have been circulated locally that I think are excellent resources are KPMG's national newsletter, if you can get access to that, and also information being published by the CFIB, the Canadian Federation of Independent Business. So look for sources of information and keep yourself informed, and use your professionals who are also your best sources of information, because they're working hard to keep themselves informed in some of these fast-changing situations. And nobody knows everything that is going to be required to successfully navigate this type of severe economic difficulty affecting your business. You know what you know what you don't know, and in fact, you also don't know what you don't know. And so from that perspective, identify gaps in your knowledge or in your team's knowledge, and especially what you don't know, and reach out and ask for help from professionals who work with you, from consultants, from your community, from the Economic Development Corporation here in Kingston, from the School of Business, from the city. And just a couple of quick examples of some of the available resources that are available in the city. This initiative, the first one, communityhelpers.ca, is actually aimed to support individuals at risk, and it's in 10 different cities around Ontario. It was started by one of our Queen's Masters in Innovation Entrepreneurship students who graduated last year, so I'm very proud of this initiative and the students who are helping to form and run Community Helpers. The other portal for accessing resources specifically available through the Smith School of Business, the Kingston Economic Development Corporation, and the City of Kingston are available at the URL that's on your screen right now as part of the Kingston Region Business Support Network. So look at the resources that are available. Be sure to register through the portal, not only for webinars, but you can also register for initiatives such as the Applied Work Experience, or AWE or AW program. And in this program, there's no cost to participate. It matches students who have recently graduated with employers, either small business, social ventures, or not-for-profit operations that need immediate help on short-term projects. And this is essentially free consulting support. And this is the type of resource that you could access readily if you need some help in some of the topics covered by this webinar, such as cash flow forecasting, applications to government or wage support programs, and transition strategy ideas to, again, get the offensive strategy developed, not just rely on doubling down on defense. And with that, I'm going to ask Lori to start moderating any audience questions and answers from this session. So thanks very much. I hope you've enjoyed the session. And if you have further questions, my contact information is on the last slide, peter.gallant@queensu.ca. But now I'm going to turn it back to Lori Ross, who's going to take some of those questions, get them grouped together if there's more than one on the same topic, and then we can discuss them. Lori, back to you.
Great. Thanks very much for your presentation, Peter. That was terrific. A lot of great practical advice and some good thoughts for everyone going forward. So let's floor, as we say, to Q&A, and I have a couple here that have already been submitted that I'll ask. But also remember that you can submit your questions right now through the Q&A button at the bottom of your screen. So Peter, here's your first question: should a business avail the CEBA loan, the CEBA loan, even if the current weekly cash flow is positive or at break even? And the second part is, how can we ensure we do not come out with an unmanageable loan plus all the rent bills at the end of this period?
Right. So it's a great question, and I'm going to handle it in a couple of different parts. So the CEBA loan is a $40,000 loan. $30,000 of it converts into a longer term loan facility that can be repaid over several years, and $10,000 is forgivable if certain programmed criteria are met. So it's a way of at least accessing $40,000 relatively quickly if you qualify, with $10,000 ultimately being forgiven and only a contribution to short to intermediate term debt of $30,000. So that may be a great way of accessing some capital in the short term. The second part of the question was, how do we ensure that we don't get ourselves, there was also part of a question, about whether or not there's a cash flow. If your cash flow is positive, should I still apply for the CEBA? To my understanding, there is no cash flow test component for the CEBA. It's a demonstration of decline in revenue against either year-on-year revenues or a trailing quarterly revenue test. So I don't believe there's a specific cash flow test, so that may not be an exclusionary criteria. Given that there's a $10,000 forgivable portion, I would certainly be applying if I qualify for the CEBA. And I'd be doing that as quickly as possible. And again, anything to build up cash flow is probably a good thing. The second part of the question of how do we ensure we don't get ourselves into an untenable financial situation, I think that's where the role of this ongoing cash flow monitoring and forecasting comes in. Once you have those cash facilities in there, you still have to spend money with an eyedropper, and your weekly and eventually your monthly cash flow forecast is going to allow you to do that. You may have rent deferrals that are starting to, or commercial mortgage deferrals that are starting to kick in now. But if this pandemic recovery takes as long as it may take in terms of not only the recovery from the health perspective, which may be a shallow recovery going forward, but also then the economic lag that will follow any of the recovery of the health of the population, we may be into this for 12, 18, 24 months or longer. So at that point, I would not use that as criteria not to apply or as a reason to perhaps not apply to some of these programs, but I would certainly be using that to monitor how much debt I've accrued from payment deferrals, mortgage deferrals, deferrals of lines of credit. Keep track of that as part of your payables of your accrual-based accounting system, at the same time as also keep an eye on cash.
Okay, thanks, Peter. There's several questions that are similar, so I'll put them all together here. How can you project cash flow for future sales when the communities and businesses have no previous history to compare this scenario with?
Yeah, and this is, I think, part of the more difficult part of developing any cash flow estimate is not only do you have to predict future sales, which is really the revenue event, you have to predict when and if you're going to be paid for those sales. So the actual cash flow event, depending on your business. Now, some businesses are essentially revenue and cash flow are very closely linked because, for example, you take credit cards or you take immediate cash payments. That's one thing. But then other businesses, you may be delivering goods or services and you may be invoicing net 30 days. Well, you may want to reduce those invoice terms to invoice and payable on receipt or net 15. You may want to carefully qualify your customers first in their ability to pay and maybe receive some verbal commitments if that's a possibility. If you have a good relationship with the customer and have that upfront discussion and say, hey, I'm really carefully managing my cash flow. And so I just want to understand that if we're able to issue an invoice, are you able to pay that in the next 10 days? So maybe some direct personal contact with a customer, more careful investigation of a customer, or asking some due diligence questions about their payment history or their ability and intent to pay would certainly be factored into that. Very difficult problem. If you're dealing with customers that have changed their economic circumstances and have been impacted dramatically, or you're dealing with new customers you haven't dealt with before, it's sometimes pretty difficult to understand how long it's going to take for those customers to pay. If these cash flows are critical, you're going to see that pop out of your cash flow plan. If you took out some of those customers from your cash flow plan, does that affect your runway? And that tells you how critical. It's almost a sensitivity analysis that tells you how critical those cash flow decisions are and those customer payments are in your overall cash flow strategy. So by going to a cash-based weekly forecast, that gives you some of that sensitivity information as well.
Okay, thanks, Peter. That wraps up the questions we have. But before we sign off, we have a couple of quick things to cover off. So I'm going to flip over to another slide here.
Great. I'll stop my screen sharing. I just wanted to post my contact information for one more second. And
absolutely.
Over to you.
Okay, terrific. Thank you. So the first thing, I want to let everyone here know about the next community classroom webinar that we're having from Smith School of Business. It happens next Wednesday, April 29th at 4 o'clock. Professor Ken Wong will be speaking about anticipating the new normal, critical changes to plan today. And Peter referenced Ken's session as a build-on of what he talked about today. So Ken Wong is a familiar face in the Kingston region. He's renowned across the country as a strategy and marketing expert. And he'll be talking about what critical changes organizations face from the COVID-19 crisis and how to reposition for success going forward. So you can register for that webinar at the same address that you registered for Peter's. It's on your screen right now, smithqueens.com/Kingston Business. And the second point is to ask you about future webinar topics from professors at Smith School of Business. We'd like your input. We have one more poll where you can give us that feedback. So we're going to open a poll momentarily. And here we go. What topics are you interested in for future webinars? So we've listed a few, and then you can also use the Q&A button again at the bottom of your screen to send us whatever other ideas you have. And we're going to leave that open for a few minutes after we wrap up this webinar. So speaking of wrapping up, Peter, thank you so much for sharing your insight, all of us today. And from Smith School of Business at Queen's University, thank you for tuning in, and take care. Bye now.